about accounting of leases that is covered by IND AS 116. Objective of IND AS 116 is to specify the principles of recognitions, measurement, presentation and disclosures of leases. There are some exclusions in IND AS 116 as it does not apply to leases in respect of explore for use of minerals, oil, natural gases and similar assets. Those are covered by IND AS 116. Leases of biological assets. Those are covered by IND AS 41. Service consensus agreements and licenses for intellectual properties. Those are covered by IND AS 115. And rights held under licensing agreement. Those are covered by IND AS 38. Like motion pictures, video recording, plays, patents, and copyrights. Although IND AS 116 says that this is non-exclusive list, but this matter we will cover in separate video. IND AS 116 provides some other recognition exemptions also. First is in respect of the lease term. If the lease term is less than 1 year and it does not have purchase option. In that case, these exemptions can be opted. So both the conditions should be satisfied. Lease term should be less than 1 year and it should not have any purchase option. And if lessee opt to apply this exemption, it has to apply this exemption on whole class of assets. Another thing that we need to take care that at the inception is if any lease is classified as a long-term lease and later on the tenure is reduced to less than 12 months, in that case, the lease will not be classified as a short-term lease. Another exemption is in respect of low-cost assets. Here, IND AS 116 is silent about any threshold limit that we need to take care when classify asset is of low value. So here, judgment plays a role. But IND AS 116 provide two conditions those need to be fulfilled before we classify any lease as a as low cost lease. So these conditions are that the underlying asset should be able to provide benefits on its own or together with the readily available assets. Second condition is that asset should not be highly dependent on interrelated with other assets. If both the conditions are satisfied and asset is of low value, then we can opt this recognition exemption. And in case of low cost recognition exemption, it has to be applied on case-to-case basis. In the short-term lease, we need to apply the exemption to whole class of assets, but in case of low cost asset, it has to be applied on case-to-case basis. Apart from it, if a lessee sublease an asset, the head lease does not qualify as lease of low value asset. The lease payment will be booked on a straight line basis. These exemptions are given as the cost to apply or efforts to apply in these for short cost item, low cost item will be higher and these items may not be of material impact on the organization's financial statements. So in this case, organization will take exemptions in applying 116 by applying concept of materiality in the conceptual framework and IND AS 116. That's why there may be an objective to provide exemptions in 116. At the inception of contract, an entity needs to assess whether it contains a lease or not. To contain a lease, it should have right to control the identified asset for a considerable consideration for a period of time. And this period of time can be measured in respect of tenure or production units, etc. Entity needs to reassess whether it contains a lease or not, only if there is change in terms and conditions. Let's understand what the meaning of identified asset. Identified asset may be explicit in contract or it may be implicit at the time of use. But supplier should not have any substantive substitute right in respect of the asset. If supplier has substantive substitute right, it will not be called an identified asset. What the meaning of substantive substitute right? It means the supplier should not have practical ability to substitute the asset and it is not going to generate any economic benefit to supplier by substituting the asset. And this we need to judge at the inception of contract. There may be some substitution of asset, but those will not be considered as substantive. For example, if there is an obligation on the supplier to substitute the asset on a particular date or on a specified event, it will not be considered as a substantive right. And if asset is to be substituted for repair or maintenance purpose, or there need to do some technical upgrade as per the contract, it will not be considered as substantive substitute right at supplier end. While we judge the substantive right, we need to exclude some future events, that there may be some agreement by future supplier, or there may be introduction of technology that is not rightly available, changes in performance of the asset in future as compared to current use, or there may be some change in price. Expectation of change in price will not be considered while we judge the substantive substitute right. In case we are not able to define the substantive substitute right, it will be considered as no substitution right. Capacity portion of an asset is an identified asset if it is physically distinct, for example, floor of the building, or in case of capacity, we are going to use substantial all the capacity of the asset. For example, capacity of fiber optical cable should be substantially used by lessee. To be a lease, one condition was there should be identified asset. Next is we should have right to control the identified asset. So to access whether we have right to control the identified asset throughout the period of use, we will check that lessee is able to obtain all the economic benefit from use of asset and it is able to direct to use the asset. To check the economic benefit, we will take care regarding the scope of assets. So all the economic benefits, those are within the scope of the contract, we should be able to access that. Economic benefits may be in form of direct, like by using it, holding it, subleasing it, or from primary output. And there may be some indirect benefit also, like byproduct and other economic benefits. If contract is only for portion of term, or we are able to access economic benefits and are able to direct to use the asset only for a portion of term of contract, so only that portion of term will be considered as a containing lease. Let's discuss direct to use concept. A customer has right to direct how and for what purpose asset is to be used. There may be a case where it is predetermined that for how and what purpose asset will be used, and customer will be considered as having the right to direct to use if supplier does not have right to change those instructions. Another case may be if there is a customized assets and it is predetermined, customized as per the requirement of the customer that for how and what purpose asset will be used, it will be considered that customer has right to direct to the use. We need to check the scope of right of use that is defined in the contract. If customer has decision making rights regarding how and what purpose asset is to be used, and these decision making rights are relevant and affect the economic benefits from right of use. For example, change type of output if customer is able to do it. For example, in case of a container use, whether it is to be used for transport of goods or for the purpose of storage of inventory or fixed assets, if customer has right to decide the usage of the asset, it is considered to having right to direct to the use. Another example may be when to produce, where to produce, how many quantity to be produced, and other economic decisions or benefits. If customer has right to decide all these things, it will be considered that customer has right to direct to the use. There may be some preventive rights to the lessor, and that protective rights typically define the scope of customer's right to use, but do not in isolation prevent the customer from having right to direct the use of the asset. For example, there may be some conditions to protect the interest of lessor in assets, to protect the personal of lessor, conditions regarding compliance with law, maximum uses of asset, and follow of operating procedures. So these protective rights of lessor does not protect or cancel the right to direct to use of asset. A contract may have a lease, more than one lease, or non-lease component also. So in case it is having more than one lease and non-lease component, in case of lessor, it need to apply IND AS 116 and IND AS 115 as the case may be. And in case of lessee, it need to allocate consideration, and IND AS 116 says that consideration will be allocated based on stand-alone price concept. So what the stand-alone price concept is? We need to determine the stand-alone price based on the price provided by the lessor. And if the price is not provided by the lessor, we need to check for the price with similar supplier, or we need to check for observable stand-alone price, or if it is not available, then we need to use our best estimation capabilities to observe the price. Based on that, we need to divide the consideration using the practical expedient. If we opt to apply the practical expedient, we will divide the total consideration in lease and non-lease component. In case of lease, if there are more than one lease, it will be divided accordingly. But if lessee opt that it is not going to use the practical expedient because of any reason, or if it is not possible to do it, then total consideration will be used as a single lease component. Lease term is considered as a non-cancelable period with an option to extend the lease term and option to terminate the lease term. In both the options to extend and terminate, we need to check the reasonable certainty. If lessee is certain to exercise the extend option, that period will be considered as a non-cancelable period. In case lessee is certain not to exercise the termination period, that termination period will be considered in non-cancelable period. If there is certainty that option to terminate will be exercised by the lessee, in that case, that termination period will not be included in calculation of non-cancelable period. To check the reasonable certainty, we need to check the economic incentive to lessee in exercise or not to exercise that option. And we need to reassess the reasonable certainty at the time of occurrence of significant event or changes in circumstances. Those relates to option to exercise, extend period or termination period. Any party can cancel the lease without permission of another party and without paying any significant penalty, lease will not be considered as enforceable. Lease term begins at the commencement date and includes the free period. At the inception of lease, we will check the reasonable certainty in respect the option to extend the lease term or to purchase the asset or to terminate the lease contract. When assessing the reasonable certainty in three of the option to extend, purchase or terminate, we have to check economic incentive flowing to the lessee. Examples: if there is significant leasehold improvement that have economic benefit in extending or terminating the lease period, and or cost of termination, for example, negotiation cost, relocation cost is higher or lesser, or whether it will affect the decision-making capacity of lessee. The importance of the asset, whether it is customized in nature, specialized by the customer, designed for him for a specific purpose, and what have been the lessee's past practices that we need to consider. There is a big change in accounting by lessee in IND AS 116. Earlier, we need to classify the leases in operating and finance lease, but now there is no classification for the perspective of lessee. All the accounting need to be done in the same way except for the exceptions we have discussed earlier. So at the inception, lessee will recognize right of use to the asset and it will comprise the amount for the lease liability, lease payment on or before the commencement date, reducing the lease incentives and initial direct cost and estimate of dismantling cost. Apart from right to use, it will recognize the lease liability also. It is the payment, present value of the payment that is not paid on the commencement date. And for calculating the present value, we will use the interest rate implicit in the lease. And if it is not determined, then lessee's incremental borrowing rate will be used. And payments will consider the fixed payment, variable payments that depends on the CPI index or labor, etc. The amount expected to be payable by the lessee under residual guarantee value and exercise price of a purchase option if it is reasonably certain that lessee will exercise that option, and payment of penalties for terminating the lease if the lease term reflects the lessee exercising an option to terminate the lease. Let's understand the accounting by lessee. After the commencement date, in respect of right of use of assets, lessee will debit the P&L by depreciation and will credit accumulated depreciation or right of use. Lessee will apply IND AS 16 or 14 or revolution model described in IND AS 16 and need to check for impairment test under IND AS 37. In respect of lease liability, lessee need to book interest on lease liability using constant periodic interest rate. It will debit PL for interest and will credit the lease liability. Apart from it, it will reduce the lease liability for the payment made. It will debit the lease liability and will credit the bank account. In respect of depreciation, if there is purchase option, then it will depreciate the asset by lease period to the end of useful life. If there is no purchase option, it will consider only lease period for calculating the depreciation. After initial recognition of lease, at the time of reassessment of lease liability, in case there is change in the lease payments, to reflect these changes in lease payment, lessee shall adjust the right of use of asset, and if the carrying value of right of use of asset is reduced to 0, in that case the differential amount it will reflect in P&L account. While reassessment of lease liabilities, we will use revised discount rate in case change in lease liability is due to revised lease term or reassessment of purchase option that was not there at the time of inception. In this case, we will use revised interest rate that is implicit in the lease, and if it cannot be defined, in that case we will use incremental borrowing cost. We will use unchanged discount rate in case change in liability is due to residual value, guarantee payment, or change in index rate. So next topic is lease modifications. So lease modifications either will be booked as a separate asset or will be booked as a reassessment of lease liability. In case of booking option of separate asset, it need to satisfy two conditions. First, there is an increase in scope of lease and price of additional right of use commensurate with its standalone price. If both the conditions are satisfied, lease modification will be booked as a separate asset. In absence of it, it will be booked as a reclassification to lease liability. Decrease in scope of asset is also booked as a reclassification to lease liability along with other modifications in lease. Let's discuss accounting by lessor. In this case, we need to check are the reward and risk are being transferred to lessee. If answer is yes, it will be classified as finance lease, and if answer is no, it will be classified as operating lease. IND AS 116 provides some indicators of finance lease. Those are that ownership is being transferred. There is an option to purchase asset at price that is lesser than fair value of asset. Lease term is for major part of economic life of asset. Present value of lease payment is close to fair value. Lease assets are of a special nature, customized as per demand of customer. Lessee can cancel lease and bond lessor's losses. Gain or losses due to fluctuation in fair value of residual accrue are borne by lessee, and lessee continue lease for second term for rent substantially lower than the fair value. So if these indicators are present, the lease will be classified as finance lease. Classification of lease in finance lease or operating lease will be done by lessor at the inception date only, and it is reassessed only if there is a lease modification. It may be in terms of scope of lease or change in consideration or change in condition of the lease. Only in these cases the reclassification will be done. Changes in estimation or changes in circumstances, for example, if there is a payment default by the lessee, these cases do not give rise to a new classification of lease for accounting purpose. At the commencement, lessor will recognize lease receivable, and these are the net investment in the lease that will count as fixed payment, variable payment based on index, residual guaranteed value, and exercise price of purchase option if it is certain that this option will be exercised, and penalties for terminating. If you see, these are the payments, those are not paid at the commencement date and should be discounted. And the net investment will include the initial direct costs other than by manufacturer or dealer lessor. And on credit side, it will recognize the PPA, and difference will be recognized in P&L for lease AR and carrying amount of PPE. In case of operating lease, in books of lessor, the lease payment received will be recognized on a systematic basis, maybe on straight line basis, and lessor will keep recognizing the assets in its books of account, and lessor will book the depreciation as per IND AS 16 or IND AS 38, whichever is applicable, and will check for the impairment as per the requirement of IND AS 36. In case lessor sells an asset to lessee and take it back on lease terms, this is called sales and leaseback transaction. In a sale and leaseback transaction, if transfer of asset is sale under IND AS 115, if answer is yes, in that case, seller lessee shall measure the right of use of assets arising from leaseback at the proportion of previous carrying amount of the asset, and will recognize the gain or loss related to transfer of rights only. And in books of buyer lessor, the asset will be booked under applicable IND AS, and lease will be recognized under IND AS 116. In case the answer is no, in books of seller lessor shall continue to recognize the transfer of asset as an asset and will recognize the financial liability under IND AS 109, and buyer seller will recognize the financial asset equal to the transfer proceeds under IND AS 109. So this is all about the IND AS 116. We have discussed IND AS 116 in summary form only, and this is one of the detailed IND AS we have. And if you want to know more or have any query, you may comment or you may discuss on the WhatsApp number given on the screen. So let's meet again with another accounting standard very soon.